All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go out and day 9 of the challenge test here. And it looks like, as I've kind of gone through, as I've looked at some of the questions that have come in, looks like we've addressed most of the questions, kind of unknowns about this, about the test here and how it works and how it operates. If there is something, please let me know. And we'll definitely go and look at that. But you can access all these things. I've put in all the videos for the various topics, and you can come in. Yesterday we added category explanations here into the sheet. Just a short little video there. And so, if there's anything else, feel free to let me know. Down here under video recordings, you can access each and every one of the videos that have been done. I do have some commonly asked questions that need to be populated here. But in all, you kind of see what I'm doing with this, right? You can see I'm using this as kind of that training tool. As we go live, with this, there's going to be a lot of questions. There's going to be a lot of things that come up, and when live money's in play, it's always just a little bit different in terms of, the emotions of the community and things like that. Hopefully everything is addressed here so that, so that you're not having to, wait for me for a response or something of that nature. But overall, I think we got it. When it goes live, there will be a little bit of change here to the test, and we'll discuss some of those. This isn't going to be the final 100% version. I've alluded to some of the changes that will happen. They're not going to be monumental or massive here. But let's go out and take a look. Entry triggers here this morning, there are none. Nothing coming into play here. We are looking at a pretty flat open here on the market. You see 0.00% change here on the market this morning. So not a whole lot going on there. Let me get logged in here so it's real time. My apologies. There we go. So we have position in Baba, and the price of Alibaba right now is 185.27. So let's go take a look. 185.27. That's above our exit level, right? Yeah, the stock's moved down. In fact, I'll comment on it here in a moment, but it's above our level, and so no change needs to be made there. Going to continue to run with that and keep that open. When I get off video, I'll update the option prices so you can see them, but that's not factored into this decision here. But it's a very simple, easy decision, right? Now, one of you pointed out to me this morning, and rightfully so, that since the challenge test, there have been 4 triggers, and all four that I've traded, paper traded, have hit top or have hit either the top or the bottom. Meaning, if I bought a call, hit the top. If bought a put, hit the bottom. And you're absolutely right. The odds of that, I have no idea. I looked briefly through some of the data set, and it's not something I've ever tracked before, or whether I'm hitting tops or bottoms, so I can't really see that. But 4 in a row hitting tops or bottoms, it's pretty interesting. And look, it's not something I make anything really out of. It's one of those things where we've talked about the result for me isn't what's the important part of this. In fact, to be honest with you, I'd rather see this challenge test go to 0, because this is going to be used as the training and as the kind of template for other people coming in, learning about how this works and how it goes. And so I'd rather have the or the understanding that, look, yes, it can go to 0. It can have these patches. So I'd rather have that in this, and then when it goes live, boom, we hit a hot streak. But regardless, it's playing the numbers, right? It's playing the numbers, and going to continue to do that here. All right, so no decisions to make, no changes to make, and so we'll revisit here this afternoon. All right, earnings this morning. A couple very interesting ones. You know me, I'm always interested in Caterpillar's earnings, right? And what they have to say and what significance they have for the market going forward. And this has been an area of concern that I have, frankly, with the market and with with what we are seeing go on out there. But let's be realistic here. We're not talking about a market where Caterpillar and the industrials drive the market. We're not talking about a market where the banks drive the market. We're talking about a market where tech drives the market. And so to look at Caterpillar, and we can look at it and say kind of what we're seeing there with Cat, but it's the ability to take Caterpillar and kind of explain the broader market that like we've been able to do for ever since I started trading, and that's gone away over the last year. That's gone away in a big way over the last year. Barron's here put out something this morning. Let's see if I can get it. The headline. It was a very interesting headline, but basically said about Caterpillar's earnings. Yeah, Caterpillar earnings beat is a sign the next slowdown hasn't arrived yet. I kind of scratched my head and thought, okay. So let's go take a look. Let's just take the visual picture here with Caterpillar, right? And you can see earnings per share. They beat expectations, right? They beat expectations. Revenue, they pretty much in line, right? Pretty much in line. If you look at revenue quarter over quarter, 5% increase. 5% increase quarter over quarter. What's interesting about that number? That's what the market average has been so far, right? That's what the overall market average has been. So 5%. Okay. It's nothing spectacular. In fact, you can get a lot better growth in a lot of other areas. But take a look at this quarter next year and the revenue expectation. It's not for growth. It's for a little bit of contraction. And obviously this can change. But this is one of the concerns. And this to me is why we see Caterpillar down today. And, it initially opened up, initially after the earnings this morning, it popped, but very quickly started to fall. Let me kind of show it to you here. But you can see here when the earnings were released, it pops and then starts to fall and opens up lower. This is one of the big reasons. And, it's one where we can go look at so many other names out there. And we can talk about year over year expected revenue growth going forward, UTX and many others. And we've looked at them, Visa. And with Caterpillar, this kind of revenue decline that's on the horizon definitely has investors spooked. And it's one of the reasons, right? This isn't brand new, but it's one of the reasons why we've seen Caterpillar lag, this overall market rally. We have the market hitting new highs. Caterpillar's nowhere close. They're still 10, 15% away from hitting those new highs. And so when you look and you say, okay, you know what? This earnings season's about revenue and the revenue story, right? Caterpillar does not live up to what we saw from Twitter yesterday. It does not live up to some of the other earnings that we have seen so far this earnings season. They have that 5%. They have the average growth in terms of what is, but in terms of what will be, there's some warning signs on the horizon here. So, this is a very interesting, very interesting thing in terms of Barron's headline there, and they're right. We're not seeing contraction in Caterpillar yet, but we could be talking about contraction in Caterpillar's revenue, over the next couple quarters, and that is something that investors don't need to take that risk, right? There's other things they can go get into after kind of seeing some of the other earnings that are out there. And so it's just one of those where, yep, Caterpillar, it'll probably have a rally or two over the course of the next quarter. But path of least resistance for Caterpillar without some sort of major macro catalyst is likely lower. Now, we also have AT&T. And AT&T earnings, you can see, dropping here on those earnings. AT&T is a different story than Caterpillar, than Twitter, than Visa, than some of these others. AT&T has not been a revenue growth story. In fact, we talked about AT&T, a year ago. It was trading at 30. That, hey, this is a really interesting investment. Why? Because it's one that most likely is not going to trade below 30 for long when it does, and the dividend on it is fantastic, right? It's so, if you have to wait for a while for it to go up, you're going to keep getting paid. That dividend, what's the dividend here today? Let me pull it up real quick. The dividend here today. There we go, 6.3%. So over 6% dividend, and you're dealing with a company whose valuation metrics are very cheap, right? Book value is 25, so it's barely trading above book. It has this story, this DirecTV acquisition. It has some other acquisitions here that HBO and all of that have created a lot of concerns. Their debt level is a concern. In fact, some has gone as far to say, well, the debt is such that the dividend is not sustainable, which is kind of a BS argument in my opinion, but it's one that is out there. And if you go and you look at the conference call, and I haven't listened to the whole hour, hour 15 minutes yet, but if you look at kind of the slides and what's kind of being, drilled to investors, it's our debt is falling. We have debt under control. Which is an ultimate long-term positive for AT&T. But it's not being met with a great reaction here today. This is a valuation. This is still a valuation story. This is still a long-term, hey, this stock is cheap. But this is not a revenue growth story or anything of that nature that is such that, hey, you know what? This is going to 50 over the course of the next couple quarters. Could it turn into that? It could, right? It definitely could, but there's no sign that it's happening here just yet. Right, so the story for me with AT&T is still the same. This is about kind of getting those acquisitions. You can see the revenue jump, because of the acquisitions. Right, have really kind of helped revenue to jump. They have a lot of good free cash flow, bringing down the debt to make the dividend and other things sustainable. There's some real positives here, but when you compare it to a UTX earnings or a Twitter earnings yesterday, or, even a Bank of America earnings the week prior, it just doesn't have the same zippity doodah here to it, and, are seeing it get hit. I think this is going to be kind of very similar to what we've seen over the last year. It's going to have some pullbacks. Those pullbacks are going to be more than buyable, and, in places where, if you're not in it or you don't have a long-term position at AT&T, become very nice positions to get into, for the long haul there. If you're looking for something relatively safe, high dividend, and something that doesn't have a whole lot of collapse risk associated here to it. Okay, so that's AT&T, that's Caterpillar, earnings here with this. Okay, let's see here. 1 second. Yeah, question about that I missed about the challenge here and about specifically Alibaba, and the question is, hey, does a move like this morning with Alibaba increase the odds of getting kicked out of the trade by the 3-day limit without hitting the price target? And the answer is yes, right? it's one of those where, yeah, it's not hitting the stop level, but okay, you know what? It's not getting to the price target yet, right? And so any delay in movement or getting to the price target, the longer the time goes, the greater the odds of getting bumped on out there with it. So it's not something that it's not something that alters or make it a different decision here today because of that, right? Still something that we could see that come into play with. In fact, we saw that a lot with some of the Katie signals, but Katie signals, they had a 30-day kind of time period there where they would knock out. But when the challenge goes live, that will be up to a 4-day limit. But keeping it the 3-day for this test, just to keep more just to keep more trades flowing, and the ability to trade more signals than anything here. Okay. All right, so great question. My apology for missing that here. Okay, overnight market was incredibly flat. S&P futures, incredibly flat. 2932 and 2940. This is an 8-point range. That is, 8-point range on a 30-point, S&P. That's just an incredibly low percentage there of movement. Generally, when we see that, what do we know about the next day? The next day is generally not game-changing, and we're not seeing a whole lot that's really game-changing out there. We have an interesting mix of, ups and downs, or, advancers versus decliners. 300 advancers, 200 decliners on a day where the S&P is actually down. But you can see techs marginally higher. Small caps are marginally higher here. Some stocks that have gotten hit in the last couple days, like a Nike, snapping on back here a little bit this morning. We're seeing things like Valero get hit, and there's some interesting energy talk out there today. And if you go and you look at this Anadarko situation where it was announced that Chevron was buying them out, you'll notice that Chevron's down today and Anadarko is up. And you go, okay, is Chevron paying more now for that, right? Is it paying more for that, for that acquisition? And the answer is possibly. Because there's talk from Oxy of a superior bid that Oxy placed, and Oxy, now there's kind of talk, okay, does Chevron have to up their bid, and is there going to be a bidding war? And so that's going to drive Anadarko higher. It's going to drive Oxy and Chevron lower, because the market views what? The market views as they're just overpaying. They're kind of in a ridiculous price level in terms of paying for it from the market perception. And so, we continue to see that. We've seen a bump up in oil, but stocks like Halliburton haven't been able to go higher. Right? In fact, some analysts are talking about oil going to 80, right? And oil's near 2019 highs, yet some of these drillers, the Halliburtons and whatnot, can't get off the schneid. We continue to see, Exxon be one of the better performers in the group, and then just some of the quality names like an EOG, be one of the better in the group. But we still see energy lagging oil. There was an analyst out here this morning with an argument that some of the tanker stocks, like TNK or some of these other kind of stocks where, let me get my note here. I had them on my note here. Some of the other names, these are lesser known names, but this is a story we've seen several times. TNP is one of them, where these are companies that basically store oil on their boats, on their vessels. And this was a big thing when we saw, the big surge in oil back in 2007 and 2008. You had all this oil being stored on ships because it was the production was increasing and the profitability there. And there's talk that with these Iranian sanctions and everything else that some of these are going to surge, but we're not seeing it. It's not happening. It's not unfolding yet. Ultimately, it could, but there's going to be a little bit of tighter supply in oil in the ultimate short run. But what do we know about oil? What do we have seen that U.S. production ramps up so quickly relative to the historical norms to take any sort of supply gaps away. And last month we saw U.S. energy production, U.S. oil production hit all-time highs. As OPEC is cutting. So it's just not the same story. It's a very changing, very dynamic story here, and one that I don't know how bullish you can get with it, but one that if Halliburton's not going higher, there's just not a lot of demand for energy names, for energy stocks. And let's face it, Halliburton, we're talking about energy, we're talking about oil prices at levels where Halliburton historically is traded in the 40s. And they're down here in the 30s and, struggling to hold on to that $30 level right now. Thanks for hopping on. Have yourselves a great one. I will talk to you later. Take care.